So one way quickly that you can look at this as well is it's cost of capital plus. And you got to, so if your capital is expensive, by definition, it's going to be more for you to lend money. So that's why it's important to tie microfinance to commercial capital and get the rates down so you can do guarantees and things to help this institution access cheaper capital, if you like. That's what savings, if you can do it as a microfinance institution, is so important. That's what Grameen Bank was able to do, which is why they generate all of their own capital and they don't have to go to neither commercial markets nor any outside sources. So those kind of things are important. Eunice, who tends to push the industry in this space, tends to say that if your cost of capital plus 10%, this is assuming certain scales, so brand new organizations this won't fit. Cost of capital plus 10%, then you're in what he calls in the green zone. You're running an efficient organization. So any organization you see having that is a good organization. If your cost of capital plus 15%, he calls it in the yellow, up to 50% in the yellow zone. And his view is if you charge more than 15% once you reach some scale above what your cost of capital is, you are basically making money off of the poor, is his view. And I think there's something to that. You can't take this hardcore country to country because some places like Latin America, it's harder to reach people in the rural areas versus the cities. But that's a general guideline you can have. And I think one of the things that's interesting in this industry, which is a little bit at the crossroads, is financial sustainability. We all up here believe it are very, very important for the institutions. But how much money do you want to make? It's perfectly fine to make money in some sense, but how you use those funds, do you use it to do more outreach, to pay back to the people that, how much do you live? Making money, he says, off of poor people, you should wait till they're not poor, then you can start making money off of them. But that's an interesting one, particularly because there's been some organizations, including one microfinance organization in Mexico that went IPO earlier this year, and where the shareholders made a lot of money. But their interest rates are among the highest, or if not the highest, for microfinance in that country. And it's pretty clear, at least in my view, that they could probably lower them and still run a very effective organization. So you get into some interesting philosophical debates that are going to happen more and more in this industry as you see commercial banks getting into this space. It's a good thing that commercial banks are getting in the space. Very good thing. Should be competition. It should be all these kind of things. But it's an interesting one to look at. Where do you fall on the spectrum of what kind of institutions you want to support? And I think everybody up here have a very similar philosophy and support similar kind of institution, which is run them sustainably, but don't try and just gouge the poor people. That's what the money lenders do. Those are the ones we're trying to put out of business. Thank you.
So this topic really gets my blood boiling, so I'm so glad that you asked the question. At Washington Cash, we charge 4% above prime. Right now it's about 12%. We have no interest in trying to take advantage of people who are in the situation. When I hear about commercial banks going into microfinance lending, it has me really question how that's going to look. I mean, every bank I know goes by the 5 C's, and our clients have none of the 5 C's. They have no good credit history. They have no collateral. So I'm not quite sure how that will work. But we lend money to people who can't go someplace else and get money. That is what we're set up for. We're the first rung on the ladder of getting back into a banking relationship. And people who borrow money from us couldn't get it someplace else. But we're not going to take advantage of that. So 12% is the current rate, it's 4% above prime. In terms of defaulting, the peer support groups that I was talking about, one of the things that most groups agree to do, they make their own rules and they have their own leadership amongst the group. But one of the things they usually agree to do is to start like an insurance fund. So every time they meet as a group, every 2 weeks, they may put $5 in the kitty each. And we manage that money, we hold the group funds for them, and it earns interest. But what that means is if somebody who's in default, they get sick or something happens and they can't make their payment, the group can decide to make the payment on that person's behalf from the group fund. And that works really well. If somebody actually does default, what we do is we take a look at what happened. It's an individual circumstance. If somebody intentionally took the money and ran, that's a different situation than somebody who ended up getting sick and couldn't successfully keep their business going. So we look at it case by case. But our intention is to treat people with respect as accountable adults and have them be successful. So our thinking behind how we interact with them around loans and around defaults or late payments is from that perspective as opposed to what a traditional banking perspective might be.
Thank you.
Can I
So,
ask another question?
go ahead.
I mean, it seems to me that what you're saying is it's costly to, enter a remote area and to set up operations, in a part of the world like Bolivia, and therefore that cost is being passed on because most of you seem to represent non-profit making organisations. You're not looking to make money out of it, but equally you're looking for sustainability. It kind of surprised me to hear that. I was expecting to hear, more that there was a charitable fund aspect of this, that you were actually looking to work with sort of, development programs to actually put an investment into it that wouldn't necessarily reach a full return. And I'm interested in does that exist also as an economic model for this, or is this kind of sustainable model the only model that's being adopted for this? Because it seems to me that a lot of these people, any interest is more interest than they can afford. I can certainly see people who are quite shocked, myself included, that 20% is seen as a relatively low sum of money for countries where they're really struggling to just lift themselves out of the gutter.
I'd love to address that a little bit because World Vision is unique in the sense that we do both kinds of things. We have charitable activities where it's just here's giving someone maybe agricultural tools to help them. There's no strings attached, it's purely charitable. Now you'll have a better farm. And we have microfinance, but never the two should meet. While they might be in the same community, they might be the same family to benefit from each of them. The idea that people are talking about of having microfinance be a sustainably run operation is important for that to continue, and so that you can keep growing your outreach to more people. The part you talked about of how many people need access to capital still is huge, and we all need to grow very fast to reach that potential opportunity. So there is room for charity, and there is room for giving people assets that will help them improve their lives. But also, these are very capable people who can take those resources, and they do a great job. These huge, great repayment rates, 98, 99, 100%. These are very, they're just heroes who do a super job and have great success, and it shows that they're able to do that with paying the interest. And so they both have a place.
So I think I like what you answered now. I just want to add 2 points. One of the points is there isn't enough philanthropic capital in the world to address the scale of this problem that we're talking about. So there is room for philanthropic capital, whether it's here or disaster relief or whatever it is. But the key is to leverage that capital. You can't scale this stuff unless you have a business model under it. So that's one aspect. The other aspect is, and I'll throw it back to you, is what would you prefer if you were poor? Would you prefer to get something, a loan where you have to pay it back, but by the same token, you are actually affecting your own situation and moving forward? And it is nothing than the feeling of saying, I did this, I'm working for this, I'm taking care of myself, or would you prefer to just have a handout and an alimony? And one of the things you see is the empowerment of people where all they want is a chance, and most people in the world don't mind paying for that instead of just having everything given to them. So I think the how people build up their own, and the power that comes with that is very, very powerful. And I remember the first time I went to Bangladesh 6 years ago. I was way out in the rural areas, and I walked down this little path between the rice paddies, and I met a few women there, and some of the women, when they saw me, they put their scarves over their face and they turned away and let me pass. And then I sat later that afternoon in the next morning in the microfinance meeting, and I had these women who, they looked me straight in the eye, and they were very proud, and they all want to tell the story about, this is what I've done. Look, I've affected my own situation. I started with 2 chickens, and now I have 500 of them in a co-op around the corner. And so there's nothing than the power of making sure that you work yourself out of this situation. So people don't mind that, and they, in many cases, prefer that from a handout.